Women don't invest in the stock market as much as men. However, there are several reasons why they should, like growing their pension or accumulating wealth. But perhaps the biggest reason of all is that research shows, and I'm looking at research which was published on CNBC, research shows that women make better investors. Well, why do women typically invest less than men, and what can women teach men about investing? Women typically invest less than men for a mix of reasons. One, the gender pay gap means on average women have less money to invest. Two, women tend to save in cash ISAs at a higher rate than men. Three, women cite a reluctance to take risks at the same rate as men. And finally, many women lack the confidence to invest. Again, the research shows this, and I'll share it in the links around this recording. So why do women make better investors then for those that do invest? Well, a lack of confidence and a lower risk appetite are cited as reasons why women invest less. However, there is some evidence to suggest that this might not be the disadvantage it seems at first glance. Men tend to overestimate their ability in the markets, which can lead them to take an excessive amount of risk. Women panic, sell less than men. Women panic less than men. Let's take a look at panic selling. Stock markets are unpredictable and volatile. During market dips, many investors become skittish and try to time the market. More often than not, this strategy backfires when the market recovers. Research from the Massachusetts Institute of Technology has shown that the people most likely to panic sell are men aged 45 or over who consider themselves to have excellent investment experience. Women are more likely to hold on to stocks instead of timing the market. Well, what does that mean for both men and women? Well, as shown by Bank of America research, selling during market dips means missing out on gains when the market recovers, of course. Women now also, of course, take fewer risks. The data again supports this. All investing carries an element of risk, but the best investors don't bite off more than they can chew. The financial advisory company Betterment looked at how a lower appetite for risk helps women in investing. Betterment suggests that women trade less, take fewer risks, and generally stay within the confines of financial advice. Some conservatism in investment is great over the long term. They also tend to do more research, which helps them panic less. Men and women approach risk in different ways. One of the most glaring differences between investment styles is research. Women tend to do a lot more research than men before investing. Additionally, they tend to demonstrate more patience in the market. As mentioned earlier, women are less likely to unload stocks during a stock market dip. What about women in hedge funds? Let's take the other extreme. Well, women outperforming men in investing isn't a new phenomenon. University of California, Berkeley looked at 35,000 private brokerage accounts over a 6-year period in the 1990s. The study found that women outperformed men by around 1 percentage point. The average real rate of return is around 5%, so even a 1% rise is impressive. But there's a confidence problem. One barrier to investment for women is, of course, a lack of confidence. Indeed, only 9% of women believe they are better investors than men. The research tells us something different. However, it is also highlighted in the research the fact that men tend to overestimate their abilities, including their abilities as investors, most importantly. The Global Financial Literacy Excellence Center underlined this in a recent survey. The women surveyed were less confident in the US stock market. Additionally, they were less confident also in their abilities to make investment decisions. That survey believes that confidence and knowledge are strongly correlated. That's the founding of the survey and the people behind it. If true, this underlines the importance of education to close the investment gap. If you're hoping that these attitudes will change with newer generations, you might have to wait a little longer, I'm afraid. 56% of millennial women said that fear is what is holding them back from the market. Why don't more women invest? Well, in light of the statistics demonstrating great results, why don't women invest more, or more women invest? One interesting reason is that 77% of women see money as a tool to help their families. Men are less likely to see money this way, which could partially explain why they invest more. As the wage gap continues to close, women will have more funds to invest. However, more work must be done, especially when it comes to granting raises in salaries to begin with. In summary, I would say women can teach men a lot about investing, sticking to a disciplined strategy, managing risk, and not trading too much all help, doing more research, panicking less. Discipline, patience, and a willingness to learn are all great qualities in an investor. Research shows that women tend to exhibit these attributes when it comes to managing their portfolios. And with mutual funds, and mutual funds run by women in particular outperforming their male counterparts, maybe it's time more men listened to the women. I hope you've enjoyed this. It's part of my campaign for $1million.com to teach more people how to be better investors.